Well, hi traders, how you going? Chris Weston here, Head of Research. We're going to be going through the setups that are really shaping my world as we go into the new trading week. Of course, we've got month end playing through between Wednesday and Thursday. Are we going to see some shenanigans, some rebalancing? Well, you imagine if you're a pension fund and you've got a lot to rebalance through equities, fixed income, and then ultimately in FX markets, you probably would have done it by now for substantial quantity. You don't leave it till the last minute. That makes no sense whatsoever. It's far too predictable, and you've got to get it away. So I'm not sure. Yeah, month end's going to be too much of a crazy shenanigan type of event based on rebalancing. Don't see that playing through. I think really, to me, it's going to be more about the payrolls and how that feeds into the substantial progress test for the Federal Reserve. So do keep your eyes on that later in the week. The market's looking for around 700,000 jobs. The question we ask as traders is how are we positioned. I think it's pretty nuanced. I think it's pretty flat. I think the market's fairly neutral on the dollar as a trading thematic going into payrolls, given what we've been seeing in price action. So, yeah, we're kind of focused on that. We're focused on China. With midweek, we get the PMI numbers coming through there. We're expecting that to grow at a slightly softer pace. And also then the day after, where we get the US ISM manufacturing. It hasn't really been too much of a volatility event for a while, but it's something that people talk about and are actively focused on as a health of the US economy. Again, we're expecting that on that diffusion index to grow at a slightly slower pace. They're the big issues. The infrastructure program in the US has been widely debated last week. And it's probably more an equity story. It's given them some momentum to the US 500 and the US equity story as we really start to focus on US earnings season, which kicks off with JP Morgan on the 14th of July. That's something that we're going to be focused and talking to clients quite actively about. Next week, of course, we've got the RBA meeting. I've put a preview on the website for clients to look at, and that's something that I think is going to be really, really important, shaping up not just the Aussie dollar and the crosses, but also the Aus 200 as well. So let's crack on. Let's have a look straight away at my overriding situation. So whether you're a scalper off 2-minute charts, to momentum scalper, or a swing trader, I still like to look at this as a situation of what's hot, what's not, and you can focus your scalps and your shorter-term strategies within that. Of course, we know the average hold time for our clients in terms of FX markets is very, very low, way lower than an hour. So we know that the scalping and EA business is obviously very strong. But let's have a look at the overriding situation. Just give us a sense of what's moving here. And what we're looking for is price on the daily chart to be above both the 5-day and the 20-day moving average. If we get that, then we get a reading of bullish green. If it's below both those short-term moving averages, then we want a bearish reading, which we put into this column here. We have a look at price relative to its pivot point. That tells me if price is had a move up relative to the prior day's range. And if it's above there, then we know the price is pushing up. If it's below, and to the extent, then we know that price is pushing low. It tells me, again, just the sort of sense of movement, the capital flows we're seeing. And then we've got the RSI, the 9-day RSI. We've used the shorter term RSI this week, and that's really just a reflection of shorter term trading. We want to see if price is above 60 on that RSI. It tells me the price is moving up, and if it's below 40, it tells me the price is moving below and lower. We're looking confluence here, so you can see that we get 3 green readings on the US dollar index. It tells me that this fairly slow-moving beast that we've got here is based on daily charts. We could probably take the time frame a little bit lower, but we can see here that the overriding flow into the dollar has been somewhat positive. We can go here into the equity markets and see that the HK50 has a bullish reading across all 3 counts. And that's the same with the US 500. So immediately markets that I'm drawn to on a bullish read, you can see those similar readings on the crude complex. We've got a bearish read on gold in Aussie dollar terms, and we've got a fairly nuanced situation as we've seen good buying coming back into the crypto space. It was looking a bit negative in terms of what we're seeing on the slow moving indicators, but in terms of short term, we can see that pushing up. So we've got disagreement there. So we're taking a fairly neutral stance from an overall bias in terms of crypto. Let's have a look at what clients are doing. It's an interesting one in terms of retail sentiment. 80% of clients have a long position on Ethereum. If we use that and Bitcoin as the sort of poster child of the coins, 20% have a short reading. Bitcoin 60% long, 40% short. Silver and gold, similar situations there where the bias is clearly to the long side and looking for a technical bounce playing through there. We'll have to see. It sort of counteracts with the overall view that we're seeing a bias to be positioned long in US dollars as well. Although that's kind of mixed. The US dollar index, 65% have got long positions there. So obviously if you expect a slightly stronger dollar, you'd probably going to see some headwinds on gold. The RBA meeting next week, something that we focused on and put out a piece today for clients. I'll put that in the daily fix, so do reach out for that. But you can see that clients are 58% are looking for short positions in the Aussie dollar. Haven't seen too much of a movement in the Aussie dollar today. Saw a bit of weakness on the open, which we'll take a look at based on the lockdowns that have played through in Sydney. Most of Australia have got some sort of restrictions playing through at the moment. But you can see the overall positions that we've been playing through. I just want to touch on this. This is an interesting chart we got from Bloomberg here, just looking at interest rate pricing. We'll have a look at this what's expected over a 1 year period. And ahead of the RBA meeting next week, we can see that the cash rate's expected to be around 23 basis points. So the market has already discounted a hike of around 15 basis points by this time next year. You go further out the curve and by sort of July 2024, which of course is when the RBA are calling for rate hikes, the market's already positioned for 4. Given that we're raising 25 basis point increments. Go to the US, similar situation, which is probably why the Aussie's been fairly well, traded in that sort of tight range, is that you've got fairly similar sort of policy settings playing through. So it gives you a sense, if you look at this, what's expected in terms of rate hikes or where the cash rate is expected to be over the next sort of 3 years. And that gives a sense. But for me, when I look at that, I see a market that's discounted and quite aggressively positioned for rate hikes going forward. So that should soften the blow a little bit. Okay, let's have a look at some of the charts we're seeing. Immediately, I just want to go to the Aussie dollar because if you go take that to a 5-minute chart, you can see the weakness that we saw on the open. You can see the gap down, bang. Obviously, everyone was talking about the economic impact that these lockdowns across New South Wales are going to have. And again, you've seen people then just buying that dip that's been playing through. So we got down to this sort of lows, 75, 72, and we sort of had a nice snap back up and we're sort of hovering fairly heavy on that. If we take it to the daily chart, you can see that weakness playing through, and we've pushed back. That sort of pin bar reversal that's played through on Friday, can we chop through those sellers? If that's going to be the case, those people who have sold into that move there, they're going to be offside. They're going to probably have to look to cover those shorts. Again, we'll have to see what happens with the broad dollar move. If we're going to see the dollar weaken off as we go into payrolls, then your higher beta currencies, your MEX, your Aussies, your Kiwis are going to do quite well in that situation. If we have a look at that dollar MEX chart, obviously we looked at that last week when the Bank of Mexico raised rates unexpectedly, and we saw that big move coming down. We're still waiting to sort of go and test this pivot playing through, but something we are watching. And if we stay on the dollar theme, look at the disagreement, or look at the conflict that's taking place in the daily chart. I love this battle. It's a fantastic battle that's taking place between dollar bulls and bears at the moment. Rallies are being sold. The buyers are really stepping in quite aggressively. You can see these long wicks, these long tails that are playing through. So again, there's this big battle that's taking place between the dollar. Of course, we can see that playing through quite nicely in euro dollar. Rallies in euro dollar are being sold, and it's just consolidating. It doesn't know what to do at the moment. It really has no idea. Again, that's just really a function of what we're seeing in the rates markets. If you have a look at 10s, they've started moving up a little bit, which I guess is somewhat dollar positive, but we need to look at it on a relative basis. Have a look at front-end yields. They've moved up nicely since the Fed meeting. Again, they're just consolidating, playing through. That dollar move, you can see it playing through in the gold market as well, where we're just really not knowing what to do. And again, that's a reflection of rates. It's a reflection of real rates. It's a reflection of that dollar move. Gold prices, something needs to happen, but you can see price around that 5-day exponential moving average. It's just moving sideways. There's a battle taking place. Someone needs to reassert their authority. At the moment, it's a range trader's paradise. Put a Bollinger Band on that one and just trade the mean reversion. I think is probably the best way to do that on the gold price. But we do have that event risk playing through later in the week, and that's something we are watching. Staying in the commodity space, we looked on the radar and we saw that the oil prices were looking strong. Let's go back to that radar. And we can see that oil prices, again, both on what we're seeing in terms of the confluence of situations there, going back on there. Have a look at this oil price there, because we're still holding this 5-day exponential. So any kind of moves down into here are being pushed up and supported. We've got this market here. It retraced about 50% of Thursday's range. The buyers have stepped in. It closed somewhere near its high. And what we want to see is whether price is going to gap up and this momentum move playing through. This is one where you can really, for the scalpers who are taking this into sort of shorter term time frames, and you can apply the same logic on a daily, but effectively what I'm going to do is leave stop orders above the market and let the market momentum push you into that trade. We're seeing that now. We can see that the buyers are stepping in. So this could really blow up and continue to move higher, and it's going to put upside into the energy space. Let's go into the index markets, because we saw that the S&P and also the HK50 were looking pretty strong in terms of that momentum that we've been seeing. We've seen the HK50 really exploding higher on Friday, really good range expansion playing through a bit, but so mitigating the indecision we saw in the doji last week. But we're going into the top end of this range, and that's going to be something that people should have on their radar. Can we push through here, or is this the natural place to fade? So again, a really interesting setup in that market. Have a look at the XJO. We've got this triangle pattern. We're getting a consolidation playing through. No one's really prepared to push price higher. Markets aren't really good to establish a lower trading range. Can we cause a trend? This is one that's on the radar. Wait for the price to complete and then go along for that. That could be quite powerful. But we've got this indecision at the moment, this consolidation. And when that's like a coiled spring, it's just ready to go bang and explode. And then we'll obviously trade it accordingly to that situation. Let's have a look at the S&P. And again, we've got that gap higher. We were bullish last week, and again, we just continue to be bullish. 5-day exponential is moving higher. It's making higher highs. It's all-time highs. This looks pretty good at the moment. But I think one of the trades that we like within this market is actually looking at it's a pairs trade. I think we're going to see outperformance now from the banks. We're going into the Q2 earnings season in the US. We're going to be watching JP Morgan. They're going to be first off the block. We're expecting fantastic earnings to come out from this space. But also, if we get a strong payrolls number and a strong ISM, we start seeing yields moving higher. We get a steeper yield curve. The banks are going to outperform in that environment. Value is going to outperform in that environment. So, banks could be a natural hedge against strong data in the US this week. It could be a good place to be if we see a sell-off in the bond market. That's how they make their earnings. And especially with the banks coming first off the blocks, we're expecting good earnings to play from there. One way we can play that is as a pairs trade. We also know that a lot of the banks are going to be coming out with some extremely strong buybacks, and that should support prices as well. It's going to take shares out of the system. It's going to boost earnings per share. We like the idea of being long banks, short SPY as a pairs trade. We've got the XLF ETF here, but we can use JP Morgan, Bank of America, Goldman Sachs. And it's going maybe like banks like State Street or Bank of New York Mellon. We go long there and we go short the SPY and just marry those trades up. But we can see here, if we look at it as a ratio, we can see that the banks are outperforming the SPY at the moment. So I think that's a trade that I like. So just long banks, one of the banks, or using an ETF and short the SPY as a short-term trade, I think could work going into the 14th of July earnings season. I like that tactically, and we can see that the market's warming up to this one as well. So something we've got on the radar as well. Going into the crypto scene, we liked Link last week, but we really wanted to see a break of this downtrend. That hasn't happened yet. Again, just really got this on the radar. I think we can break through the downtrend, break through this horizontal resistance levels at just above 20, then I think this can have quite an explosive move to the upside there. We're still holding this double bottom, and if that was to give way, then you've got a really powerful move down. But that's something that we are watching. We're breaking through this 5-day exponential, just got that 20 on the radar. Let's have a look at Bitcoin. What we wanted to see last week was a move through this supply. We got that, came back to test it, we found support. So there probably would have been a few people looking to go long in the retest there, and they've probably been stopped out on that move back below there, the failed break. So that would have been something that probably would have seen a few people getting stopped out. But we've seen an explosive move up in that last hour, and that's something that we do need to consider ourselves. We've got a really interesting setup on the daily. We've got this bear flag, and we can see the huge defense of that. Big buyers stepping in there and there. And again, it just shows just how important this bear flag is. If we get a close below there, really important. But also move through here, and I think we could probably make an established back into the top end of that range as well. So all the news around what's happening in China, closing down the miners. But the price is being well defended around these lows. That's up as a really, really important level. If it closes below here, that's going to have huge, significant importance. But at the moment, it feels like we're probably going to break back above here and move back into 38,000. But we're waiting for the market to warm to us. So interesting what's going on the dollar this week. We've got this battle playing through that's resonating in the gold price. We're still taking a fairly positive view on what's happening in US equity markets. We'd like the idea of being long banks relative to the SPY. Gold's going to be a reflection of what's happening in the US dollar and what's happening in rates. And crypto's defending some really key levels. So really important week. Trade it with Pepperstone.